Hey everybody, it's Mike from Orderflows, and welcome to the last trading day of the year. It's December 30th, Friday, December 30th, 2022. And it was an interesting day. We sold off pretty much all night and into the morning, but then we got a rally going into the close, and we settled uh, down, but just slightly. It's down like a quarter of a point. But this big move down. A lot of people have been talking about, sort of coming into the last trading day of the year. There was probably going to be selling anyway because, people are trying to lock in their losses to be written off on their tax bills, right? The whole concept of tax harvesting. So what does 2023 bring? Well, we'll see. I mean, the Fed has sort of signaled that they're going to likely wait until 2024 to cut interest rates. But, in all honesty, that's a long way away. A lot could happen between now and 2024. So, really, I think going into 2023, the Fed obviously is something you're going to keep an eye on. And, we got earnings coming out in the middle of January. But, I want to talk about some of the interesting order flow that took place today. I said cash opened and, the market had been under pressure all night. Cash opened and, sort of made new lows, bounced up, came back. Had a nice little pullback, then rallied, then obviously sold off again, and then had that big monster rally going into the close. So let's take a look at the footprint chart. So again, cash opened, and we were already trading at our lows. We got a little bit of a bounce off our lows a few minutes afterwards. And again, there's not really any strong reason to be buying at, right off the cash open because, it's the last trading day of the year. It's probably going to be a very busy day. I mean, it's that, people think, oh, that Christmas to New Year's, it's going to be kind of quiet. But, what today is, and you get it every year, right? It's the last trading day of the year. That's one thing. It's the quarter end and it's year end. So you're going to have a lot of people taking advantage of, if they have losses, selling it to lock in a potential, tax write-off. And, people are just adjusting their portfolio going into the new year. It's really a day that, can be a trend day. But as you saw, right, the market did reverse and go back up. So, what I thought was really interesting. Now, again, sort of coming into this day, we had been selling off. We did get this nice little bounce here, right, at 833. And it looked like, maybe we go higher, right? You see nice positive deltas. You got that nice reversal bar right here. But again, at 8:33 in the morning, right, this is the chart here, right? Selling off all night. Then you're going to say, well, this market this is going to be the low. Probably not, right? Cash is just opened. And again, you're coming into year end. Market had been trending down all night. Don't expect the low to be made, right away. And, we kept making new lows, kept making a new low here at 850. We did bounce up a bit, and then we started, sort of drifting sideways most of the morning. Now, what was interesting is this 38.35 area right in here. Now, on the bar chart, let's expand it up a little bit. 38.35, just draw this line right here, is right here. Okay, so because what I'm going to talk about is, the big volume that's coming in. Okay, so our low was made here earlier. Trading 38.35 shortly after the low, went up, came back down, traded 38.35, went up, came back down, trading 38.35. However, after about 10:30, some big size came in right in here. I don't know if you can see that. Let me expand it up a little bit. Okay, so at 10:21, it traded all the way down to 34 and a quarter. At 10:22, it had a low, this bar of 34 and 3/4. 10:24, low of 34 and 3/4. Now all of a sudden, 10:25, 10:26, you're seeing a big bid come into the market, right? It trades 862, it trades 957, it trades 1274. Excuse me, and it trades 19. Sorry about that. Got something stuck in my throat there. Then it trades 1993. So, this volume, 862, the 957, the 1274, the 1993, that's over 5,000 contracts. A big bid came in there, right? It's holding this market from 1026 to 1029. Now, everyone that trades on a dome or a market depth map, oh my gosh, there's such big liquidity, market's got to go up, right? Well, it did go up a little bit, but it came down actually once that liquidity got taken out, right? Market did dip down to 38.33 3/4, but again, it's still hanging around this 38.35. Okay, what does that mean? Who knows what that 5,000 contracts is? It could be, again, somebody covering a position. It could be something against an option. We don't know. All I do know is there was a big size that came in there, didn't really hold the market. And again, you got to look at it in context. Okay, this was our low of the day here at 851. We rallied up, up into 38.50s and came back down. And again, it's kind of acting as support. Okay. Then what happens a few bars later, right? All of a sudden we see 5 points higher. This is 38.35 at 38.40. Not only do you see this big bid there, 25.14, 2,500 contracts, but this market just gets bought up. It just basically essentially gets swept up. There's about three. This is 2,500. This is 942. So I'd say about 3,500 contracts, right? So basically, it just got bid up immediately, right? It was trading 38.37 basically. They said just buy it up to 38.40. They just bought everything up there, right? You can see, how do I know that? Is because there's no counter trade. Someone could say, well, isn't this a stop? Well, a stop for what? Right? Someone was buying it right here. Okay, if this was a stop to protect that, it'd be a sell stop, right? Because they're long. So basically, and it's 5 points away, right? It's not like 4.75. Basically, in my opinion, someone has got a lot of stuff to buy, basically, right? They bought about 5,000 here, another 3,000 right here, because they bought everything from 38 all the way up to 40, right? And they turned it bid. So, and then their bid is just basically holding the market. Finally, it trades out, it comes down a little bit, but this 38.40, then, we have the 38.35 right here. Okay, so here's 40, here's 35. It's acting basically as your support area now. I mean, this was a support area, but obviously we're trading much higher. A big bid comes in there. You still got to be aware of these levels, right, where the big bids came in to the market. Okay, so now this 40 area is sort of your new level. 35 was earlier. Now it's 40, obviously, but it happened pretty quick. And you can see it's holding for the most part. We do dip a little bit below, and we trade back up into the 45s. In the mid 40s. For quite a while before the market breaks, right? And then once we start to break, okay. Now, I know I have a support. I know earlier I had a big buyer at 40. I know I had a big buyer at 35. What I want to watch is, are they still there, right? Do they still have more buying? Because if I know that I had the big buying earlier and the market comes back to that area, to that level, it was acting as support earlier, right? You saw that, right? It traded a few times into it, right? Here and here. I mean, here you can sort of sense that it's not necessarily there anymore, but the market did jump up anyway. So again, I'm not, I can't say, well, it's no longer there because we traded 3 ticks through it. I still want to watch it when it sort of comes back into it on a more serious level, meaning that we had been a bit higher, 10 points higher almost, then start coming down into that area. And we come back into it right here, 38.40. You don't see the volume, right? There were some volumes here, 318, 324. But I'm not really seeing anything on the bids here at this area. I mean, 187, that's nothing. 137, that's nothing. 158, that's nothing. You even see some aggressive selling going into that at this 187 here against 15. Sort of goes sideways, breaks down, then a few minutes later comes into that 35 area. So I know that my 40 area didn't hold. So I know that buyer's no longer there. And again, when you see 8,000 contracts, essentially 8,500 contracts, I'm not looking at it in the sense of, oh, this is a day trader. They're going to have a stop in here somewhere to get out of it. No, this is probably somebody that's, again, either doing this against some other position, or maybe they got a much longer term view. Maybe they think the market's going to go up in the new year, whatever. But my point is, it's more of, other time frame trader, right? Other time frame money. long-term money, right? And they're just not going to immediately reverse if it goes 5 points against them, right? Because basically the average between 40 and 35 is like what, 37 and a half. I don't think they're going to have a stop down here at 32 to get out, because that's not how they trade, right? They got deep pockets. They're probably going to be holding it for a while if it's a new position. If it's getting out of something or a hedge against something, then I'm not expecting any immediate stop loss, thrown in the market to get out. Because again, I know people that trade, and their view is sort of, like scalpers, right? Every buy is a sell, right? Anytime someone gets long, they got to start looking at the exit. Well, long-term traders, they don't think in that way, right? They're more of the the Dan Aykroyd type on trading places where you're sitting there, pork bellies, right? And he sort of takes a view. That's how long-term traders, macro guys, have that sort of view. They say, okay, I'm ready to get in. Boom, buy 5,000. Boom, buy another 3,000. They're not immediately sweating it out, thinking, I just paid 37 and a half as average. If we break down to 30, I'm out. No, they're going to be holding it for the duration as long as they can. So I know that buying is not there. And if I know that, and imagine it was just 5,000 contracts at 35. Now you're coming back into that area. You don't see that sort of buying. I'm looking for the market to blow right through. And it did. It just blew right through here pretty easily, from 35 all the way down into the low 20s, where it sort of made this low and it's starting to come back up, right? It broke through pretty quick. You're talking, that was 12:21 to 12:27, so about 6 minutes, right, from breaking that at 35 down to basically 21 and a half. But 10 points in a matter of 1, 2, 3, 4, 5, 6 minutes. Okay, now it starts coming back up, right? And again, on this move back up, you're starting to see some nice aggressive buying. Obviously, the stacked imbalance here, the imbalance is spread out in this bar, the buying imbalance is here. You got some nice positive deltas, nice strong delta going into the low, which you expect to see, minus 1100. Then you got a nice strong positive delta, plus 1200. Okay, I like to see that, right? I mean, that's what you want to see if you're coming into a low, is sort of some blow off delta to the negative side going into the low, which is what that 1100 is. And then people realize, hey, this is cheap. Let's get in. Everyone's coming out of the woodwork to buy it. You can see the aggressive trading coming in, and the market starts rallying, right? It starts rallying back up to that 35 area. Then it starts hanging around here again. Now, this was interesting, 38.30. Okay, so came down, hit the low, 21 and a half, started rallying back up. So we hit 30 on the way down, 30 on the back up, on the move back up. And then afterwards, we're starting to see, again, some more support coming in here. Okay, it hits 30 right here at 1248, 1249, but just trade small, 6, 3s, 7. Then you see the 398, the 692, the 951. So you already got 2,000 being traded on the bid here. So you got support coming into the market here, 38.30. What's interesting, look at these numbers. Where are these bids coming in? 30, 35, 40. Right? Talk about nice, I'll say even numbers, but nice round numbers. Every 5 points you're seeing support come in. So again, this was about 400, 700, 900, about 2,000, another 1,000, 1045. So about 3,000 right here at 38.30. Okay, 600, 1,800. So again, you're looking at over 5,000 contracts. Now again, people that stare at a dome all day or look at a heat map, they see this liquidity in there, and the market's going to rally off this, and they start to get long. And while this trade did work out, what happens is it broke down first, right? Once it cleared out all that liquidity there, it traded lower, right? And I think that's one of the things that frustrates people when they're new to trading on a dome or looking at a heat map, is thinking 5,000 contracts, this market's got to hold. Well, no. Once that 5,000 contracts that liquidity is removed from the market's going to do whatever it wants. there's still some selling pressure in there. Market did drop from 38.30, all the way back down to what was it here? 20. I don't know. That's 23. Then it starts coming back up, before it starts making that big move. So the short-term traders, okay, and that's the difference between short-term traders and long-term traders, right? Other time frame traders, meaning everybody else besides intraday retail traders or prop traders. The long-term traders, they're happy, right? Their average now is about 38, 35 on how many 10,000 contracts, 12,000 contracts. They're fine to let the market go down a little bit. I mean, again, their view of the market is much longer term than yours and mine. But if you're buying it here by looking at the liquidity in the market, thinking, oh, there's a big bid in here, I got to get long. Well, you're going to get stopped out. Okay? I mean, sometimes it works, sometimes it doesn't. And that's the whole point of trading. There's nothing that's 100%. There's nothing that's 95%. So again, if you're buying it there, okay, honestly, a lot of times I've taken that shot. I've bought it looking for this rally. Did you get a rally? 30 up to how high did it get up to? 32.5. So maybe you could have scalped out a couple of points, maybe up to 2 or something. But again, it's one of those things where is it going to hold or not? And you're trying to scalp out 2 points, but then you're stopped out for 2 points or a point pretty quick. Again, it's a different style of trading. But anyway, I guess my point is, don't be seduced by seeing these big bids in the market, thinking, you got to jump in front, because that's sort of the human nature, right? You see a big buyer stepping in. So like what's going on in the UK with that power water or whatever it is, everyone's buying it, and see old men buying it at the store, from little kids to old men. Everyone's rushing to buy it because of whatever. Same thing, right? You see big buyers coming into the market. Don't think, oh, I got to buy it, right? Still, understand what's happening in the order flow. Then we got that big rally going up, going into the close. What was interesting in the order flow going into this rally, once it got above 38.40, it was interesting, because if you're watching these levels, right, the 30 level, once we got back above it, we quickly got back above 35. And once we got above 35, hit 40, it just took off, right? Let's move this up to the 40 area. This is 40 right here. So, once we got, the 30, the buyers at 30, down here, came down, went back above 30, went back above 35, hit 40, jumped up, came back down, tested 40. You see those little wicks in there in the candles, and then it just, took that nice vertical move up all the way from 40 all the way up above 60, pretty quick going into the close here. And this was that first move up. You're seeing the aggressive buying in here, but again, you're not really seeing like big standout volume coming in on the bids anywhere. Top of this bar, some nice bids here, 794, 1300. But on this last move up, I think it was around 10 minutes before the close, you start seeing some big bids coming in here, 1500, the 700. Here's another 1100, 1200. So you're seeing, people sort of really coming out in force to buy. So that person that bought, the 35s, the 40s, even the 30s, they're sitting pretty right now, right? But they got a longer term view than you and I, and they're able to hold it longer. And that's the difference between the different types of traders. Sometimes people lose track of that, right? They lose track of that there are other, people that got different long-term views of the market that we don't have. So what we can do as individual traders is sort of jump on the back of it. Okay. So, again, this is the last trading day of the year, December 30th. I'll try to get some more videos up over the New Year's holiday, schedule permitting. So guys, again, I hope you enjoy these videos. Be sure to like the video and hit subscribe. That's what keeps me wanting to make these videos for you. So have a great rest of the year. If I don't make another video, and I'll catch you guys on the next video. Bye bye.